Welcome guys to Purpose Opinion. And this video I'm not gonna make it too long, so I want to talk about two things. First, the main topic, which is how AI, artificial intelligence, is impacting the interest rate, US interest rate. I want to focus on how the AI is impacting or will impact US interest rate going forward, if there will be an impact at all, right? And the second point is I launched a new startup. So I'll talk a bit about that towards the end of the video. And yeah, I'll provide a link to the startup LinkedIn company, the LinkedIn page in the video description. So yeah, let's get started. So, I mean, if you just think about it, if you're just over the top of your head, like off the top of your head, if you just want to think about how AI might impact in US federal bond interest rate, I mean, the answer I hear from most people is it'll reduce interest rate because productivity will increase, so inflation will drop, and so interest rates will have to drop, right? Well, I mean, that would have happened in a normal, healthy economy with good competition between big businesses and small businesses, a strong SME, small medium enterprise market, and strong structural capital raising mechanisms for everyone involved. A fair playing game, Phil, basically, okay? If you had a healthy economy, low wealth gap, low wage gap, and you had basically a lot of competition between small, medium, and then the companies, then yeah, that would have happened. You would have used AI to reduce increase productivity and to drop the inflation and thus reduce the interest rate. But this is where it gets tricky for USA because and that is why I picked USA for this. I'll talk about other countries too for a bit in the towards the end, but just on the point of USA, USA is right now, if you look at S&P 500, the major S&P 500 is basically S&P 7 or the big seven, the big seven tech companies, Apple, Microsoft, Nvidia. And then you have Meta, and then Tesla, and then two more I forgot. But yeah, so you basically have seven big tech companies that are splashing $1 trillion between each other and then recording them as profits. It's a Ponzi scheme, to keep it simple. It's a Ponzi scheme among the big players that are the only dominant competitive players in the field. So yeah, the reason AI is actually pushing US interest rates up is because AI is increasing productivity and reducing cost, but not for the people, for the big companies, because they can cut off their workforce, right? And it's just big seven companies that are borrowing. Like, I'll just give an example. Like Microsoft in the last 4 months borrowed close to $100 billion for AI. So you have big seven companies borrowing a shitload of money and just splashing that money between them in a circle and reporting those as profits or revenue or whatever. But this is not a recipe for success, right? And that is why the baseline forecast is that interest rates will rise under AI's influence, basically in the next few years. We're talking about US interest rates, and I'll get to other countries in a bit. So this is where it gets tricky because I'll just show you guys a chart so you can get a better understanding. So yeah, if you can see basically. So yeah, impact on US interest rates. So you have the baseline rate, right? This 2025 all the way to 2033. So you have the baseline rate around 3.5. Yeah, the forecast it will rise a bit because the US debt situation is not so good. They have a lot of debt, a lot of deficit spending. So it'll rise all the way to like 3.7-ish. That's the baseline. And then you have the natural rate. So the baseline rate is the rate the US federal control, that's the front end of the rates, right? The 2-year, 5-year treasuries, the 2-year treasuries we're talking about. And then you have the natural rate, the back end of the rates, right? The 15, 30 years treasury bonds. Well, that is more dependent on the market forces. So obviously that will rise higher. And so this is an interesting point. If you just forget about the AI part, just look at this. If I can just annotate this part, see this, you see that there the baseline rate, the natural rate, the back end of the rate, the long-term bonds, to put it simply, the long-term bond rates will rise above the baseline short-term bond rate around 2030, right? We're talking about 2030. And now, why is that impactful? Let's just talk about that for a point, for a bit. So, what does that mean? That means borrowing money for the long run is more expensive than borrowing money for the short run, which makes sense. If you're a country going bankrupt, people don't want to give you money for the long run, right? So now let's talk about the AI scenario. So I'll just change the color. So here you have this red line. So you have the tech boom, policy shift. So under the AI scenario, by 2030 is you're talking about a rate close to 4.75%, 5% rate. Okay, cool. So under the baseline scenario, you're talking about a rate close to 3.7-ish. So you're talking about a 1%, that's a 100 basis point increase in rates. Okay. What about the natural rate, the back end? So that's around 4.2. Okay, so basically, long story short, yeah, what you have here is two factors coming together, two forces, big forces. One is this, it's getting much more expensive to borrow money in the long run. So companies will make more short-term decisions. So as you know, short-term decisions, short-term borrowing means short-term refinancing, frequent refinancing, which leads to more volatility. So that's one force that's gonna occur. And then you have the AI force, which is gonna push the rate up at least 100 basis point in this forecast, right? At least. So you have that going on, right? Okay, cool. Now let's go back to the video. I'll stop sharing. So that's for USA. Now, what about other countries? Well, so you have countries like China, where there is much more, even though it's a socialist country, you have much more competition between the big and small businesses. The government subsidizes and supports the small businesses. So their AI will be not an um it will be kind of opposite effect because the smaller companies can actually utilize AI to reduce cost for the people, not for the company. And yeah, that's where the socialist benefits comes in. But yeah, basically countries where there's a healthy competition, a large number of companies in every sector, healthy competition between big and small companies, there you will see AI helping to reduce the interest rate for the government bonds. But in a very unhealthy, unequal society like UK or USA, yeah, it's just going to increase the interest rate. So this is a very interesting finding. And yeah, I hope you guys will think about it, share what you guys think about that, share in the comments, right? But yeah, before I go, I just want to introduce my new channel. Not new channel, it's a new startup. So I'll just show you the link. So yeah, it's Quant Tiger AI. We are delivering next generation AI-powered market insights for the Dhaka Stock Exchange, right? And yeah, we do an weekly report on the Dhaka Stock Exchange. So basically, long story short, we are trying to build a Bangladeshi version of the Renaissance Technologies. If you guys know, you know, right? It's a hedge fund, popular hedge fund in USA. They focus on mathematical modeling and algo trading, algorithm-based trading, right? So we're trying to build a similar model to that. And yeah, you guys can go follow the page, or if you want to subscribe to the weekly report we give out, sure, just drop your email address in the comment section and I'll make sure you get the weekly report. So right now it's a free report, but we'll convert it into a premium version report for future in the future. And that's how we are supposed to generate our first income source. And then we'll shift to other services to generate, diversify our revenue for the company. So right now we're just focused on the model. We have our remote virtual softwares, AI, virtual computers, basically, virtual computing powers that we rented out and from Oracle. So we're building the models, increasing our sample size, reducing deviations. And yeah, for now, if you all, I guess I can offer you guys from the startup is if you want to subscribe to the weekly report that we send out every Friday on focused on Dhaka Stock Exchange. So yeah, I'll stop right there. And yeah, so that's it for this one. I'll see you guys in another video and until then, peace.